Hey, Tom here, FlipAnythingUSA. So on my blog, I share how I made my fortune in real estate. Starting at 19 years old, buying real estate under market, selling it for more. By the time I was 28, I was a millionaire, and that was a long time ago. So look, today we're going to watch this video by Jordan Belfort. I've only watched him one other time, and that was when he did something with Grant Cardone. It wasn't a very good, it wasn't a good interview, and it was no fault of Jordan's. It was the guest that was the issue, I think, on that one. But this guy's an interesting guy from what I've heard. I remember I saw the movie that Leonardo DiCaprio portrayed him in, and let's watch this, and I'll make some comments, and we'll see where it goes.
To you how the straight line works is to tell you the story of how I invented it. So what happened was when I started Stratton, the brokerage firm that you saw on the movie, right? It didn't begin with me selling $5 to $10 stocks to the richest 1% of Americans. In fact, I was doing very much the opposite. I was selling penny stocks, which are stocks that are priced under $1, and I was selling them to average moms and pops, people with little or no net worth. So for example, when someone would buy a penny stock, they might put in $500 and the stock would be priced at 10 cents a share. And it was just like an emotional impulse sale. It wasn't like a real serious long-term investment. You'd call a mom or pop, meaning just like they could be someone that worked in a
basically, he's talking about selling to people that are gullible and that are kind of low information investors. Anyways, is what it is.
Civil service job. It could be a mailman. It could be a teacher. It could be anybody. But it wasn't a wealthy businessman or businesswoman that literally had a huge net worth, ordered people around, was used to making big decisions. They were average people. So the average investment was $500, and of that, your commission was very high. You'd make about $250 in commission, right? So big commission.
Okay, so you already know where this is going. They obviously wasn't selling. They weren't getting any value out of this thing. It'd be interesting to see how he sells this thing, but that's an extremely high commission.
I had trained my first 12 people how to sell penny stocks, and they were doing really, really well. I had this small firm, and the average kid was making about $10,000 a month, which was pretty damn good back in 1988. And I was making maybe about $1 million a year, which is pretty damn good too, right? Now, let me go back a step in the story here. When I went down to Wall Street in the beginning, it was just like the movie portrayed it. That very first day, it was a big firm I was working at, and I walked into this firm. It was LF Rothschild, right? Big New York Stock Exchange firm. And when I walked in, I couldn't believe it. The guys were just on the phone, they're yelling and screaming and cursing, and the fear and the greed was just unbelievable, right? And they were calling the richest 1% of Americans. That's who they were calling. And when they would call one of these business owners that had, accounts at 3 or 4 other firms, there weren't people calling people that didn't have any money in the market, and these people would make an investment. Ultimately, those investments would be between, $250,000 and sometimes upwards of $1 million. The portfolio they would end up managing for these people was $1 million. So now let's just do the math on that. When you call up a person with little or no net worth, it's a $500 trade in a penny stock. When you call up a really wealthy person, that's, a business owner, the trade could be $1 million. So I started at the big firm and I watched that happen. And then when the market crashed that first day, and they said, that I was a broker, and they said, the firm said all brokers will become cab drivers. The firm shut down, and that was that. I was out of a job, and I ended up going to this small firm on Long Island that was still hiring, and that turned out to be a penny stock firm. So now I go into this penny stock firm, and I'm shocked at what I see. I see these uneducated kids calling average moms and pops and doing these very small $500 at the most $1,000 trades, making these very high commissions, versus what I saw on the big New York Stock Exchange firms where they're calling the wealthiest 1%. The kids are very educated and they're getting these massive investments from people. And the collective wisdom at the time was that, you can't have these kids who didn't really go to college and really weren't sophisticated enough to get on the phone with a wealthy person and close them. You couldn't have them calling the rich people because they wouldn't be able to do it. So that's why things were the way they were. There was this idea that the collective wisdom was you take educated kids who went to the best schools and you have them call the very successful people. And then you have these uneducated kids who really aren't great salespeople and don't have the financial background to talk the talk, so to speak, calling average moms and pops. I had the benefit of seeing both worlds. And when I walked into this company, this small company, the Investor Center, in fact, there's a great scene from the movie. Let's play that right now. And this is actually going to explain to you what happens. It's a fabulous scene. So
yeah, this is interesting. So I already can tell this is going to be his light bulb moment, right? Now, I think he was, obviously he went to jail or prison for something related to this kind of stuff. This is his light bulb moment where he learned information that most people don't know. That's what I do. I mean, that's what happened to me, too. I think it was a little more legit business, but in as much as I realized I could buy real estate at 19 years old, no credit, no money, and I made my first deal, and I've been very successful ever since. It was getting the knowledge, and he sounds like he's going to share something good here. I mean, people, I can do it. Good sales, to be a good salesperson is great, but you can misuse it, and it is power. It is power. You can sell people garbage, okay, and that's unfortunate. And he's talking about the low information investors here. That's kind of what Grant Cardone has concentrated on, the unaccredited investor. But so let's watch this clip from the movie he's going to talk about. And hey, please subscribe and share. You'll learn a lot on my videos about real estate, but this is pretty interesting to watch. We'll continue.
I want you guys to watch it, and then when we're done, I'll meet you in this line. About 2 minutes here, and we'll come back.
Hey, I'm looking for an investor center.
Is that you want to invest?
No, investor center. I'm looking for investor center.
Yeah, that's what I'm saying. This is it. This is it.
Oh,
I'm Dwayne.
you're Dwayne.
Yeah.
Hi, Dwayne. We spoke on the phone. I'm Jordan Belfort. I'm the broker from Rothschild from New York.
Yes, yeah, have a seat. How are you?
Remember we had a
We spoke
conversation
on the phone earlier, right?
2 hours ago. Right.
I never got the stock.
Aren't you never heard of them up and comers? That's what that means.
3 cents a share. That's $3, you cheap fuck.
So, where are your Quotrons here?
Cotrons?
Yeah, computers.
No, we don't even need computers here. We just trade right off the pink sheets here.
Pink sheets?
Yeah, they're penny stocks. Companies that can't get listed on NASDAQ, they don't have enough capital, their shares trade here.
Penny stocks?
Yeah, this one, Aerotyne, is a really interesting, Aerotyne.
Aerotyne, yeah.
Aerotyne.
Aerotyne, yeah.
Very hot stock right now.
Yeah?
These are just a couple of brothers that are making radar detectors out of their garage. They're out of Dubuque. Maybe it's microwaves. I'm not sure, but you call the company's main line. Their mom Dorothy answers, and she is so sweet.
company?
I actually don't know what else. I don't know anything else about them other than that.
6 cents a share? Come on. Who buys this crap?
Well, I mean, honestly, mostly schmucks. Postmen, there's always postmen.
Right.
Plumbers, they see our ads in the back of Hustler and Popular Mechanics, and our ads actually say they can get rich quick.
Hustler?
Get rich
Remember the
quick.
Girly magazine?
Yeah. Nudie mag.
A lot.
Yeah.
We're helping them finance houses. We're helping them buy their wife a diamond ring, a boat, maybe.
Is this stuff regulated, or are you guys? What are you doing here?
Sort of.
Sort of. Jesus Christ, the spread on these is huge.
Yeah, and that's the point. What's your name again?
Mine, Jordan Belfort.
Jordan, what do you get on a blue chip stock?
I make 1%. I did make 1%.
Pink sheets, it's 50.
It's 50%. 50% commission.
Yep.
For what?
It's our markup for our services.
So if I sell a stock at $10,000, my commission is $5,000.
If you sell $10,000 worth of this stock, I will personally give you a blowjob for free. And I hope it happens.
All right, so now notice, pretty cool, right? Leo did an amazing job. It was uncannily accurate, right? But notice in the beginning, that first thing I say to the manager, I'm like, wow, the spread, meaning the commission on these stocks is ridiculous. It's like 50% commission. So I'm saying to myself, wait a second, so if I get someone to buy $10,000 worth of stock, I make $5,000. In my mind, though, I was thinking, if I get someone to buy $1 million of stock, I'll get, right? And he's like, well, no, rich people don't buy penny stocks.
Yeah, that's interesting because really going to that, what he's talking about is, look, when you have a great product that sells itself, you'll sell a lot and you can take a smaller commission. That's what, the more, he talked about the firm we worked at before, sell $1 million worth of stock, get a 1% commission. Well, when you sell crap, and that's what they're talking about, selling crap, that was words from the script, you got to find incentive somewhere, and the incentive is in the salesman. And so, like I say, you can get a good salesman, and he can sell anything. I mean, but whether or not it's morally good or not, which obviously, if you're making a 50% commission, if you're getting $250 on a $500 sale, then you're not doing anybody any favors on the buying into that deal. But let's keep watching.
He's like, if you sell someone a penny stock, I'll give you a blowjob for free. 10,000 a penny stock, I'll give you a blowjob for free, right? Those rich people won't buy penny stocks, right? So the idea was you go to poor people and you sell them a little bit. Now, it didn't make sense to me. Just so you know, when I first...
Of course, poor people are low information. They have low information and gullible.
Heard it. I was like, it didn't quite add up. I said, why wouldn't rich people buy penny stocks? Rich people love to speculate. They love to gamble. Maybe they're not going to put as much money into a stock like that, but they'll put something in, a lot more than $500. Because remember, people who are very rich, well, when they make an investment, the investment has to be big enough to move their needle, so to speak. If they win, they're right, and they only invest $500, it doesn't change their lifestyle. So they have to invest more to get a result that matters to them, right? So immediately I'm thinking, why wouldn't I just sell penny stocks to rich people? Normally, I would have fought the guy right there. Like I said, wait a second, I believe you're wrong. But at that moment in time, I was so distraught, so down on myself. Because remember, I had declared bankruptcy in the meat business, and now Wall Street had gone out of business. I'm like a two-time loser. I'm 22 years old. I'm like, I thought I had like the Midas touch in reverse. The Midas touch is the golden touch, right? I thought I had the Midas touch in reverse. Everything I touched turned to shit, right? So when I went to work at this new place, the Investor Center, in the back of my mind, it didn't really make sense to me that rich people wouldn't buy penny stocks. But I went along, as you saw, in that first pitch, I knocked it out of the park. That was the biggest penny stock trade in history for the company, right? And then over the next few months, all these other kids started following me, and I helped them get better at closing. And I started teaching a system. The system did not have a name. This is before the straight line. It was a really great training system. It had to do with tonality, sounding good. It had to do with overcoming objections, right? And eventually, the opportunity came for me to open up my own firm, which I did after a little bit of forethought, because I was nervous after my first bankruptcy. In fact, my first bankruptcy had almost formed a limiting belief in me. I was like, maybe I'm not meant to be a businessman. I'm just a great salesperson. So always remember, there's limiting beliefs when you fail.
So it's interesting. So you guys know that I've made my fortune buying properties, buying them under market. And the parallel is different. I mean, obviously, I wasn't selling. I mean, I resell property, but it goes out on the open market and the highest bidder gets it. So a little different. I don't have to sell it like they sold, junk stock. But on the purchase, when I go to buy property, that's what parallels this. And what I say is you have to sell yourself. In other words, you have to, and he's talking about changing tonality and this, that. And, and I'm sure, he knows everything about it, or he knows a lot about it. He sounds like he does. But I never had to think about that deeply. You sell yourself. In other words, like attracts like. That's I tell you, like a number one thing. When you talk to somebody and you take an interest in them and what they do, they will like you because you're interested. You're interested. As a young man dating, I always knew, talk to a girl, ask her what she does, be interested in what she does, and you win her over. Okay, didn't have to be the best looking guy in the room. I could sway the girl my way because I took an interest in her, and I didn't. In other words, it was about listening and listening. Really, it's about listening. A lot of it is listening, and like I say, just get people to like you. And it's like a superpower when you're a good salesman. But I want to hear his take on this and what he did.
It'll be very, very insidious, right? Either way, I broke through that. I opened up my own firm, and I began doing what I was doing at the small firm, the Investor Center. I was selling penny stocks to average moms and pops. And my 12 guys, as I said, were making about $10,000 a month, and everything was going fine. Until one morning, I'm lying in bed, and poof, the light bulb goes off. I'm like, wait a second. Now, why am I only calling average moms and pops? I'll call rich people, too. Let me see if that works. Now that I had some success under my belt, I went back to that first day and said, it never made sense to me. Let me try to experiment and see what happens. So what I did is I kept the firm running as it was, and I pulled one guy, Danny, the Jonah Hill character, right, from the movie, and I had the two of us experimenting with calling rich people and trying to sell rich people, businessmen, penny stocks. I bought a list of leads called Dun & Bradstreet leads. It was a list of about 1 million of the wealthiest people in the United States, all right, business owners with large companies. And we began calling. And to my own shock, no one would buy penny stocks. Really shocked me. So I was like, all right, well, maybe it's the price. People think it's 10 cents or 20 cents. It must be a piece of shit. Right? So I said, let me try something else. Let me try to sell them instead $6 stocks. Because the way a stock, and this is unimportant, but in the financial world, you can actually change the price of a stock by doing what's called a split. You can do a forward split or a reverse split. When you do a forward split, which is very common, a stock that's $100 would be split in half. It will become a $50 stock, but you have twice as many shares outstanding. Same company, each share has the same value, but you reduce the price so it's more attractive to the average investor. Make sense? In other words, people might not want to buy a stock that's $100. They're more likely to buy a stock that's $50.
And that goes to, people associate quality with price, right? When you go buy something, if you see two things and they're the same thing, but different companies, one's a little better than the other, but one's 5 times more expensive, but maybe it has a name brand that you're going to gravitate. You're going to go, what? Because I always say, you can buy twice or buy once. Buy the good stuff once. So it makes sense what he's doing. You raise the value, which I didn't actually know you could do a reverse split like that. I've seen stock split, but I never thought about a reverse split, making the stock cost more or worth more. Like Warren Buffett, he's got a stock. Last time I looked, I think his stock was $250,000 per share. Pretty interesting strategy. Let's keep listening.
So you do a forward split. A reverse split is the opposite. When you have a stock that's say $1 and you want to make that stock $5 because people don't want to buy stocks that cheap, they split it back up, a 1-for-5 reverse split, and now you have a $5 stock, but with 1/5 as many outstanding shares. You don't have to understand, but it's simple math. The point is I said to myself, maybe just by the sheer pricing of this, like it's 50 cents, people don't think it's a good company, they think it's a piece of shit, right? So I tried that. And I did a 1-for-12 reverse split. I brought the price up to $6 a share of this little company. It was a small entertainment company called Ventura Entertainment. And I began pitching this $6 stock. And once again, to my shock, almost nobody bought. Few people, but not many. And that really shocked me. I didn't know what was going on. I sounded it. My pitch was great. No one bought. And then one day, maybe a few days later, I'm just lying in bed. It's always in bed when I get these great brainstorms. Another idea. I'm like, wait a second. I know what's going on. And the whole thing hit me. When I was working at LF Rothschild, think about it. Rothschild is one of the most well-respected, prestigious banking names in the world. So you were Jordan Belfort. They didn't know who I was, right? So I was someone they were unfamiliar with. But I'm calling on behalf of LF Rothschild. So they've heard of Rothschild. And I would be selling them a big stock like IBM or Microsoft or Exxon. You get it? You were selling them stocks that they heard of. So watch. You were calling from LF Rothschild. Check. They heard of that. You were selling them stock in Exxon oil, check, they heard of that. And you were Jordan Belfort, that's it, they hadn't heard of you. So 2 out of 3 are in your favor. 1 out of 3 is working against you. Now let's look at what was happening at Stratton. I was Jordan Belfort, so I never heard of him.
Well, you know, I got to tell you, he's really giving you diamonds here for a lot of reasons. One, he's doing something, right? He's making something happen. A lot of people just never even make anything happen. But he's analyzing, and he's finding his weaknesses, and that's what everybody should do. So let's keep listening. I'm really enjoying this.
Before, calling from Stratton, a brokerage firm they never heard of before, selling Ventura Entertainment, a company never heard of before. 3 strikes, and I was out. You get it? This is very, very important for when it comes to understanding the straight line and why you're having problems closing over the phone right now. So please pay close attention to all the chain of events that I'm about to explain. It's very, very important for your understanding. Once you get this, by the way, you're almost halfway there. A lot more to learn, but this is so crucial. You get it? So I'll repeat. Rather than starting off this conversation by trying to sell them something that they never heard of before, something they were unfamiliar with, meaning Ventura, let me start by making the first sale something that is brand name recognition. Let me start by selling them a blue chip company. Now, back in the day, I chose a company named Eastman Kodak. Now, you might not have heard of Kodak because they're now out of business, but back then, in the late 80s, they were one of the bluest of the blue chip companies. They were in the camera and film business, right? Before digital photographs put them out of business. Kodak was a blue chip stock, and they were being sued by a company named Polaroid for patent infringement.
You know, a friend of mine owns a huge, several camera stores in Los Angeles, and he just spent $1 million on Eastman Kodak processing equipment right before the digital stuff just killed his equipment, and he took a total loss on it. But anyways, yeah, let's keep listening.
All right, so in response to that, the stock had become depressed. Anyway, my idea was to pitch them Eastman Kodak, which everybody had heard of. And then as far as Stratton goes, rather than trying to just say, hey, I'm calling from Stratton Oakmont, you don't know us, we're brand new, I came up with a way of explaining Stratton that made it seem like it was a positive that they hadn't heard of us. My exact pitch was something like this. Hey, it's Jordan Belfort calling from Stratton. You might not have heard of us before because for the last 10 years, we were strictly an institutional block trading firm dealing with a select group of banks, insurance companies, and pension funds. However, sir, we recently opened up our doors to the more substantial private investor like yourself. And all I want to do right now, with your permission, of course, is send you some information on my company, Stratton Oakmont, and then get back to you down the road next time we're making a recommendation to our core client base. Does that sound fair enough? Pretty good memory, right? That was the pitch, almost verbatim. See, what I did is I said, you probably haven't heard of Stratton because, that's my justifier now, why you haven't. For the last 10 years, we were strictly an institutional block trading firm, dealing with a select group of banks, insurance companies, and pension funds. However, we've recently opened up our doors to the more substantial private investor like yourself. So it all made sense now, right? They actually are a prestigious company. They just were not doing business with individuals. They were only dealing with other banks and insurance companies. And then I actually would use that later on to help close the sale. And they've only recently opened up their doors to substantial private investors, will confident like them. You get it? That's called reframing. I took a negative and turned it into a positive. And here's the truth. It was true. In other words, Stratton had been in business for 10 years, and they were doing trading. They were block traders. They would trade institution to institution. They were not very good at it. They were a shitty little company. But the point was, I came up with language that wasn't lying. It was the truth, but it made it seem great.
He's putting lipstick on a pig.
I refer to that in straight line terminology as the truth well told. Meaning, there are many ways for you to explain Diamante Insurance. There's many different strategies, many different ways you can go about saying, you might not have heard of Diamante before, but, and then what is that but? There's many ways to explain Diamante, many, many ways, right? But guess what, guys? One of them is the best. There's one way that you can explain what your company is, when it was formed, why it does what it does. There's one way that is the most compelling way, that sounds the best, that makes people trust you, that makes people want to do business with you. And your job here, and what we do with the straight line system, is we show you step by step how to extract that story, that truth well told, so you have that right in front of you and you use it every single time of how you explain your company. And when you do that, it's incredibly, almost shockingly effective. But that's only 1/10 of 1%. That's a side note to the straight line, but it's an important one. You reframe. So we always have this, you might want to write this down. We always have an overarching principle called the truth well told. Meaning, you do not want to lie. You don't want to exaggerate. You don't want to make things up and lie to people about your company. That's not what you do. Rather, you find the best version of the truth that sounds good, that makes sense, that frames you in the best possible light without lying or exaggerating or breaking any laws. It's the truth well told. That's what you do. So that's what I did at Stratton. I came up with this way of explaining why you haven't heard of us before. So now, watch what happens. Now, you're calling Stratton Oakmont, you're getting a call, imagine you're the guy.
So look, I think we get it. This is interesting. There's some parallels, and there's some really good information here, really good information. Now look, he worked for a shady company, making 100% commission, or, 50% commission. Obviously the people weren't getting value. So you're basically talking people into a very bad deal. And you're selling somebody something, okay? So that doesn't really parallel what I do with my stuff. Now, what I do is I'm a real estate investor. So I buy for as cheap as I can. I buy property under market, okay? And when I buy something, I buy it based on what the values are today. Because real estate is kind of like a stock sometimes. It can go down in value. So somebody asked me, do you ever feel bad for the people you're buying a property from, that you're buying it under market? And the answer is no, because I've bought property under market, held it until it went down and it was worth less than what I paid for it. And believe me, they weren't feeling bad that they sold it. They were glad they sold it, okay? So there is a time to sell, okay? You want to buy a property under market, but you don't want to pay too much. But the parallels I see here is what he's talking about is making people like you. That's what I always tell. Like attracts like. When you talk to a person on the phone or in person or whatever, you're trying to buy a property from a person, they have to like you. There's 100 other people that are trying to buy their property sometimes. You got to stand out. And the way you stand out is you listen to them. You talk to them. You be interested in them and what they do. And you learn a lot of that in my book. If you don't have my book, Wake Up and Smell the Real Estate, bestseller for a time there on Audible and, or I should say Kindle. And paperback, you can get it on Amazon. It's like Jordan. I got that light bulb moment when I was 19. I realized I can buy property under market, owner financed, no credit, and no money. And the first deal I bought, you'll hear about that. I got 6-month escrow. I moved in. I lived rent free for 6 months. Came up with my $10,000 to put down. Made $100,000 on that property. But the day I closed it, I was offered $20,000 more than I had paid for it. So, but this is a really good job, Jordan. I appreciate you sharing so much. You really are sharing some fantastic stuff. I don't rely on phone sales, but really, there's so many parallels to this, and that is, you do when you sell your product, you want your product to look good. My deal is we're buying good product. We're buying it under market. And so when we put it on the open market, it's for everybody to buy. You set a price, it may get bid up more than what you paid for it or what you're putting it up for sale for, but there's a lot of similarities here in as much as the psychology of sales. So this is an excellent video, and I just use it's like, listen, being a good salesperson, it's like a superpower. It really is. They got these scammy seminars all over the country. They say free seminar. It's a scam. It's not free. You come in, they're trying to find out. You are the target. You are the money. The free seminar is the bait to get you in, and then they want to take your money, and they find out who's got $5,000, who's got $10,000, who can get $30,000. You are the money. Free seminar stuff is just the bait to get you in the door and to hard sell you, and they're probably paying similar commissions to what Jordan was getting, years ago when he worked for Stratton. That's all. Hey, Jordan, again, appreciate the video. Please subscribe, folks. If you give my channel a chance, if you take a look, if you're interested in making money in real estate, that's what I've been doing successfully my whole life. I have over 100,000 square foot of rentals that put my kids through college. I write checks for college, checks for cars. I pay cash for houses. I pay I buy $1 million buildings, I pay cash for those too. I have that capacity, and it's all due to real estate. And I'm also, like Jordan, he was talking about those uneducated kids that were making sales. That's me, uneducated kid. But you know what? The information I got, the learning, the skills set that I got, you're never going to learn in school. You're never going to learn in college. You're only going to learn it from somebody like myself, just like Jordan. He's got unique experience. I have unique experience too. If you're interested in making money in real estate, you can learn a lot for pennies on what it's worth. So that's it. Thanks for watching.